What's going on, gang? Today we're going to be talking about the 2020 housing bubble bust or pop that's happening right around the corner. And I'm also going to be talking about 19% interest rate mortgage coming to America in the very distant future, okay? So without any further delay, let's get started. Let's talk about the 19% interest rates that I believe that's going to be coming to our mortgage uh, in the housing industry. Now, when I say this, many people are going to say, Mike, you're crazy. This is never going to happen. And they said the same exact thing to me back in 2016 when I said that gold was the play when it was 1,100 bucks, and everyone was laughing at me. They said the same exact thing when I said Bitcoin, Chainlink, Decentraland were to play when Chainlink was only 10 cents a coin and Decentraland was 10 cents. Now you can see Chainlink after a 50% crash is at $12 and Decentraland is at $2 and some change, okay? These are the same people that I said in 2019 that we're gonna have $9 per gallon gas prices, and everyone was laughing at me because it was the best time. They were printing out money, etc. And guess what? Today we're seeing $6-7 per gallon gas, which I predicted in 2019 that's going to be coming up. So going back to the story, we will see 19% interest rates, in my opinion, in the distant future. And the way it's going to play out is going to be something like this. Interest rates is climbing up and up and up and up, and the Fed is just trying to prepare for what's coming down the line, which is, in my opinion, we're going to be hitting it in the next, by December, in the winter time, we're going to see the housing price cuts happen dramatically, okay? And more, this is going to be the beginning phase of the downfall. But the Fed is trying to prep up the interest rate because it's been all-time low, as almost a 0%, and they're just trying to ramp it up. And we're going to have a recession, which are already in, like I reported to you guys in my last video. And at that time, they're going to be forced to buckle back down, okay? All right. And then if the war continues in Europe, then the petrodollar is going to be in even more serious trouble than it is, and the Fed has no other choice but to increase the interest rate at all-time high so they can not lose the world reserve currency. And that will be the last bang, or the last fireworks before the collapse of the dollar anyways, okay? So when I said we're going to see 19% interest rates, I'm not talking about next week or next month, but in the upcoming years, we will see 19% interest rates because that's the only remedy left for us to protect the petrodollar. Because right now we have Bitcoin, we have the Russian rubles. It's been going up and up and up. They're demanding everyone to pay for their natural resources in their own dollars. We have China, which Israel is even start buying their currency, which is going to be the next world biggest economy. So all this is leading into the biggest real estate crash, the biggest depression in American history that we have never seen. It's going to, sorry guys, in my opinion, it's going to even make the Great Depression look like a pancake walk, if I can say that, okay? Because there's so many things going wrong here, okay? Now, the housing bubble in 2020, I believe that we're going to see dramatic price. We're going to see dramatic sellers going to be in shock by the winter time, this winter coming up, okay? Because we're seeing that people can't qualify for loans because the price of the homes are so high, even if the interest goes up just about this much, okay? Now, historically, interest rates are about 6-7% on mortgages, if not a little bit more, and now we're at, almost zero, and we're trying to come up because the Fed is getting ready for the incoming recession/depression, and they're going to try to lower the interest rate more, okay, at that time. And then after that, that's when we're going to get the really high, because they're going to realize that inflation is no joke. They're going to realize that the world is moving away from the dollar, and all these people that have the dollar are just dumping it because we're printing so much money out, we've created so much debt, and so on and so on. So if we don't nuke ourselves in this upcoming third war, 2020 December, around that winter time in the next year, 2023, I think we're going to see dramatic inventory coming in. We're going to see dramatic uh, price cuts coming in, and we're going to see an all-out pain and suffering, and not only in America, in Europe, in many countries. There's already riots going on for food shortages in Sri Lanka, in Pakistan, in many different countries, and when you consider all that stuff up, okay, when we have massive printing of money, when we have most people totally in debt, okay, from the corporations, from like U.S. government owns trillions and trillions of dollars with a T, not a B, okay. You have corporations that are zombie companies that are just barely making it. You're seeing the stock market come down as the interest goes up, as people realize that their wealth is drying up, and at the same time, you're seeing that businesses are now laying off, and you will see this accelerate high-end employees, okay, people that have college degrees, people that are making 75,000 above, right? You're going to see those type of individuals start losing their jobs, okay, and getting less paid because of what's happening in the economy, where people just don't have any more money. Now, the market is rigged, okay? The market is rigged because back in 2020, we should have the real estate bubble fully bust. We had 7.7 million people that didn't make their house payments, okay? That was that real estate crash that I've been telling you guys is going to happen since 2016. I've been warning you guys about, okay? But Big Brother, central controllers, what did they do? They tried to stop that. They closed out the court system. They wouldn't allow the banks to foreclose, okay? But now things are getting really real. The prices of things are getting extremely high, from gas to milk to eggs to even meat, okay? And now we're having a crisis around the world, which all contributes to more pain and suffering at home and for the average worker, which then translates to that middle class, the people that were getting the $75,000 and above pay jobs, losing their jobs, which then they're going to be forced to sell their homes. And the people that bought a home in the past 5 to 7 years, they're not going to have enough equity to sell. Yes, when interest rates are all-time zero, these asset bubbles keep going up. That's the price. That's why the price of houses have gone up 20% in many states. That's why you see an F-150 that sold 10 years ago brand new for $15,000 or is now selling for $43,000. Okay, that's because of artificial manipulation, because we don't have a free market, and they manipulate the interest rates one way or the other, or they print out money one way or the other, and it affects our economy. And now that the stimulus checks are gone, now that people are putting everything on their credit cards, now that the jobs are going to get cut off, okay, and the people that are on the lower spectrum of the jobs, none of them are working. A lot of small percentage of them are working because they're just collecting unemployment and they're getting paid more, which is now causing the small businesses to default on this side, okay? And the high-end jobs, people, they're going to be getting laid off because the corporations are not being profitable. The cost of raw materials is going up. The average consumer cannot consume anymore because they already have so much debt. And then you're going to see both spectrums of people trying to sell their homes, okay? Because when you lose your job, how are you going to make the monthly payments? Because it's all about cash flow to pay the monthly payments. And if you can't make the mortgage, what's going to happen? And if there's more inventory on the street from you, and they have equity, let's say someone down the street has owned their home for 15 years, and they haven't refinanced, they haven't used their home as an ATM, he or she is going to be able to bring out the price down, and they're still going to have equity. Someone else down the street that bought the house 2 or 3 years ago, well, guess what? They're not going to have any equity in this property. They thought they did because prices were going up 20%, but it's not going up anymore, okay? So we're going to have at both ends, the lower end people that have low end jobs, they haven't been able to buy homes because this was not a subprime thing, okay? They've just been renting. The other types of people that have the good jobs, good college degrees, they're going to start getting laid off because the corporations they work for are not making money, okay? They did when the stimulus check was out, and they're going to now need to start selling their homes. And don't forget about the 7.7 million people that were in forbearance, and because in the last crash, the 2006 fourth quarter, okay, a lot of the people that got loan mods, which is basically a forbearance program in a sense, majority of those individuals that I personally dealt with, okay, because I would market to them, they would call me and they would tell me, I'm going to get a loan mod. I said, okay. And maybe a year go by, a year and a half go by, I would have follow-up systems. And then we would reach out to them. They would reach out to us and say, oh, I'm ready to sell now because I'm behind in payments again. So what I realized is, I would say at least 50% of the people that got those loan modifications back in the last real estate crash, all those people ended up selling or getting behind on their house payments again because it didn't really cure the problem. The problem was that they weren't generating enough income to pay for this debt. And a lot of them bought these homes with just no money down or very low money down. So simply put, they didn't have any skin in the game, okay? When you're able to get a FHA or a VA for 3.5% down, a lot of times your local city will do down payment assistance. You don't have any skin in the game, okay? And this is what happened this time. A lot of people just get into these homes, ultra low interest rates. They were able to buy a house they could never afford to own back in 2016. 2016 people were buying $150,000 homes. The same exact people with the same exact money are now buying $300,000 homes because interest rates are so low, okay? But they forgot about that, hey, the taxes are gonna be there, that the maintenance on this bigger home is gonna be there, and that the economy was pumping up because of all the free money, but now that the free money is gone, and the interest rates are going up, that there's gonna be pain, okay? And as credit card companies pull back their credit, okay, because in a hard economy, in a hard times, they usually don't lend out. In 2020 they did because of Big Brother, but usually in a hard time the banks pull back their credit. In a great times they're just giving people money, okay? And so when people really need that credit, it's going to get shrunk and shrunk and shrunk. If it's your Visa, MasterCard, debit card, unsecured credit, or if it's your whatever, things are going to get more tightened, which is going to bring more pain. So up in the very future, I would say by this December, we're going to see more and more price cuts. We're going to see the side effect of the drugs wearing away. And what is the drugs? It's that free money, it's that easy money that's been given out to everyone. Anyone can borrow a loan almost, as long as they can get an FHA loan. And I brought to you guys that they even changed the rules for FHA loan so more people could get into it. So in one sense, it is kind of like subprime lending, but it's more of people with college degrees versus just the construction worker or the kitchen worker, like the last bubble where they were doing adjustable mortgages. Talking about adjustable mortgages are doing a comeback again in this crisis because they got to make these loans out. If they don't make the loans out, if people don't get into debt, then there's going to be massive freeze in the system. So 2022 is the very beginning, I think, is the very beginning of what's coming, which is massive sales in real estate. There's going to be massive sales in the stock market. And this is not a financial advice. This is just what I'm doing and the way I'm seeing it. 2022 is extremely, extremely great year to be a real estate investor, especially for seller financing, because we're going to be in a situation where there's going to be a lot of homeowners, the 7.7 million people that got a forbearance program. I would say half of those people are going to get back into trouble again, okay? There's already 1 million people that were not able to work their forbearance program, okay? So there's that million people, you still have that 6 point something million, okay? And then you're gonna have all these people that are going to start losing their homes, okay? Because of losing their jobs, and therefore they cannot make them house payments, okay? And you're gonna have people that have equity in their homes, and they're going to realize that, there's a big crash coming, and they're all going to come out and try to sell their home. And the people that have the equity, massive equity, they're able to discount and give discounts to their home sell. While they do that, they're hurting everyone else that doesn't have the equity, and that's when the homes are gonna be going into negative equity, upside down, which is going to make a lot of people be willing to just walk out of these loans because they hardly put any money into it, right? They put like 3.5%, if even that. And so it's really easy for them to walk away from, just like the people did in the last crash with the bad loans that the banks made, okay? So I'm pretty stoked. I'm pretty excited for what's coming in the market. There's going to be a lot of pain and suffering for a lot of people, but the people that have been patient, like myself, that's been very, very patient, because patience is the key for success. Is to know when to make a move, when to attack, and when not to attack. It takes a lot of discipline. Okay, because there's a lot of people that have been on that party, drinking the champagne, drinking the wine, just thinking that life is going to be great forever, and we're going into a major cycle of the American economy that a lot of people do not recall because we're not old enough. Only like their grandparents can recall where there's food shortages, where there's going to be lines, when there is 18, 19% interest rates, and that's what I am predicting that's coming for America. But on the flip side, there's going to be a lot of opportunity to make money because when there's blood in the streets, the people that are like myself that are willing to take the risk will get the biscuit. Not all the time, that's why it's called risk. But I'm willing to take the risk. 2022, I think, is one of the best years to be a real estate investor, and I'm happy to be a risk taker. Okay. If you guys are interested in seller financing, buying houses subject to, then download my free book, guys. Go to My Real Estate Dojo and download my book. I think I got a question. Let's see what it says. So, is it better to buy a home when interest rates are low and home prices are high, or interest rates is high and loan prices are? That's a very, very good question. And see, this is how the bankers have it, but that's why I don't like stinky bankers. Because no matter what the situation is, they win at both directions. Okay, just like my friend said, if interest rates are all-time low, that creates significant amount of qualified buyers, which they're not qualified, okay? And they're able to now increase the asset price, right? Where you'll see 20%, 30% increases in homes. The same thing is happening with F-150s. The same thing is happening with just average car. When everyone can get a loan, then guess what? The price of those things are going. That's why I don't like debt, because debt, bankers, they enslave us to have to work more and more and more. And instead of having technology help us to decrease the cost of stuff, right? Homes, cars, because technology, robots making cars should make the cost of cars go down. They actually do the inverse because of central bankers, okay? Now, for me, when I buy something, because I don't get into debt, I never borrow money, I don't like stinky bankers, and that's what I do for you guys. When I try to buy something, my first priority is not how much is the monthly payments, because I never do the monthly payments. I don't give a rat's ass about that. What I'm looking for is, what is the asking price, right? That is the most important thing to me. If this thing, imagine this was a house, right? Which is not, this is my toy knife, whatever. And let's imagine this was a house. When I'm buying this, if I can get this for 150, then I want to buy it at 150 versus 300. Okay. Now, for many other people, they don't care about this worth 300. And how do I know? Because I have a lot of students that I've taught in the car auto industry, and when they do financing, the first thing that most buyers want to know is, what is my monthly payments? They don't care that they got to pay 10 times the amount if they had versus if they had paid cash. All they care about is, what is my monthly payments? And this is how the bankers fool people, okay? Where for me, what I'm looking for is to get it at a deep discount. If something is worth 300, I want to get it at half the price. I want to get it at 60 cents. I want to get it at 70 cents. I don't want to pay the herd price, okay? And that's why I'll step out of the market, and that's why I call myself a fire investor, is because I'm not always actively buying real estate, okay? When the market is going up and up, I'm out, so I'm not going to be taking those kind of risks. Now, a lot of people will take the risks because they don't have their own skin in the game. They're just signing a piece of paper and they're getting the loan. Where if you're a cash buyer, you're using your own money, right? And you're not using, like, there are people out there that are buying, for example, subject to deals right now on YouTube, right? They're buying subject to deals. It doesn't even cash flow. It has no equity, but it's not their money. They're raising other people's money. They're like, hey, you have money, give it to us. We'll give you some kind of percentage back. Well, of course, these individuals do not care that they're buying equity without no equity, or it's upside down, or they don't care about the price. This is not their money. But the thing is that when it's your money, when you work hard for your money, when you saved your money, when you sacrifice, then you're going to be more of a astute consumer to say, I'm not going to pay retail price. I will not participate. Or I'm going to only deal with motivated sellers where I can buy their stuff at a deep discount. okay? And that's the way I do. So for me, since I don't deal with bankers, I don't really care what the interest rate is, okay? Now, of course, if the interest rate is 1%, like in this upcoming crash, I'm gonna be loving it because interest rates are so low versus the last crash. The last crash when I got into real estate, I was buying homes, taking over people's mortgages, creating seller financing with 6%, 7%, 8%, 9%, 10% interest rate. Well, today, when I take over someone's home in this upcoming crash, the interest is going to be ultra low. So that's going to create a lot of cash flow for me in the rental business of it, aspect of it. But in the one sense, I don't really care. Like, if I don't have to use my money, like when I buy a house subject to, well, I'm not going to bring all cash, right? I'm going to bring as little money as possible. So in that situation, I don't care what the interest rate is, as long as I get cash flow from it, okay? As long as it's a property that's going to go appreciate, it's a property that I can rent out easily, it's a property that I could live into it, because that's my buying criteria, okay? I don't buy in war zones, I don't buy in, beat up areas. I don't do fix and flip. Just like the new flip on bicycles that I teach you guys, I don't do the fix and flip. There's people that do that, but that's not my cup of tea. My cup of tea is to find a motivated seller, buy it at a discount, rent it out, or quickly flip it, okay? So going back to answer your question, I am trying to buy stuff at a discount, at a low price, if I'm using my cash. If I'm not using my cash and the seller's gonna provide seller financing, then I'm a lot more flexible because it's not my cash and I don't have a whole lot of skin in the game. And my parameters is it a good area? Is it an area that I will live in? Is it an area where, I don't have to put a lot of money into the property? Because I don't want to buy a subject to and dump $20,000, $30,000 into it. That to me, that's stupid. If I want to do that, I just go get a traditional loan. So I'm trying to buy, a subject to where, for example, for this, I'm going to show you my exact playbook. This crash, okay, the last crash, the 2006, I had 3 businesses. I was making tons of money. I had a lot of cash flow coming in. And in this crash, I don't have those businesses anymore. I spend all my time with my family, and money is fake to me, and I realize those are just bogus stuff. So in this crash, my mentality has changed on how to find deals. In the last crash, I would buy any deal that was 3 months behind. So if they had 3 months behind, which means if the monthly payment was $1,500, they're 3 months behind, that's like $5,000. I'm willing to do that deal. But this time, I don't have the cash flow to be sparing like that. So this time, I'm not gonna do that, okay? This time, I am looking for, like last time I was looking for people that were divorced, they were behind on payment, or they were pre-foreclosures, okay? Which means they were behind already 2 or 3 months. This time, I'm only looking for sellers that are wealthy, okay? They're motivated because of emotional versus financial. And I'm looking only for homes that are in nice areas, and I'll show you exactly my blueprint. What I'm looking for right now is vacation homes. And I'm looking to buy vacation homes in pretty areas because I want to deal with sellers that are financially astute. They're smart, they're in good financial situation, and they had a second home. But now maybe their business is getting slower. Maybe they lost their $200,000 job or $300,000 job, and they care about their credit. They're still making their payments, but they realize that things are changing. Or maybe they still have their $300,000 job, but they're smart enough to realize that the market is shifting, okay? And so what I'm looking for is vacation homes from rich families or wealthy families that this is their vacation home, that have no attachment to it because it's not their own home. They live in a different state, so, and they see what's coming because A, they lost their jobs, or they're smart and they see what's coming and they're just willing to just let go. Now they're gonna try to hire a realtor and they're gonna realize that it doesn't work, or they're gonna have to come up a lot of money out of their pocket. So what I'm looking for is motivated, emotional sellers that have vacation homes, that a house needs no work, they're behind by a lake or by a mountain, somewhere beautiful, and I'm looking to buy their homes without them even being behind in payments, okay? I'm looking to buy their homes where they subsidize the monthly payments from them. For example, if their monthly payments is $1,500, right, I'm trying to have them pay me $500 and I pay $1,000, okay? Now, a lot of people say, why would they do that? Well, they're in a financial situation where they don't live in this property, okay? If they've lost their jobs, they have money in the bank, they have money in the in their 401s, and they're going to get unemployment. And if they haven't lost their job, they're making money, but they realize that, hey, they're better bleed a little bit versus bleed a whole lot. That's my ideal candidate. A candidate that is not behind in payments. The house is in amazing shape, just move-in ready pretty much. And they're willing to subsidize my life like Big Brother subsidizes a lot of people's paychecks, right? So I'm trying to get a someone that's on the wealthier side to subsidize my investment for me. Okay. Now that sounds pretty crazy, but that's exactly what I'm looking for. Okay. Now that's my primary candidate. When I see that, I'm gonna jump on the deal. My second primary candidate is the same kind of audience, but maybe they're not going to subsidize my life, but they're going to pay for the closing costs, or they're going to pay 1 month or 2 months of the mortgage when I close on the deal, or I don't have to pay anything. I just show up at the title company, I sign, and then I make next month payments to their bank for them. So I'm not looking for people that are behind in payments 2 or 3 months like my last crash, because at that time I owned my moving company. It was making hundreds and thousands a month for me. I owned my real estate brokerage firm. I had rental properties. So I was doing all that stuff. As you guys know, I've donated most of my stuff to the homeless. So my situation is different this time. So I'm not gonna look for deals where I have to fork over $10,000 to close this deal, which is nothing. I would do that, if I had my companies that were making all this money, I would do that. If I didn't have any kids, I wanted to just hustle and bustle. But at this age, I'm an old guy. I'm only trying to cherry pick the best of the best. The rest, they're still great deals, and I would do it if I was 20 years younger, 10 years younger, but I'm not there, and I don't need to work so much, and I want to put my time into my kids, so I'm going to cherry pick. I'm going to cherry pick vacation homes from people that are wealthy, that have wealthy. Maybe they lost a lot of money in the stocks and the markets crash, and they're not motivated. Maybe they lost their jobs, or they think they're going to lose their jobs, or they realize that the market shifted. Whatever it is, they're emotionally motivated versus financially, which means that they got to sell. They don't live in this state. They don't have an attachment to it, and they're more understanding of subject to. They're more understanding of seller financing. And I'm going to have these individuals buy their homes, and they're going to be my private bank, and I'm going to try to get many of them to subsidize my investment for me in one way or another. Or they're going to pay for the closing costs, they may pay 2 or 3 months of mortgage payments, or I'll have them pay some of that mortgage for me. So for example, if the mortgage is $1,500, I'll have them pay $500 for me for the next 3 years or 4 years. Okay. Now people say, Mike, that's crazy. No one's going to do that. Well, I already had people do that in the last crash, so I know it's possible. Sure, there's not a lot of those kind of sellers out there, but they're still out there, and I'm willing to do the marketing, the follow-up, the systems to get those people, and that's my cup of tea. My cup of tea is not divorces this cycle, not people that are behind in payments. I'm not dealing with that because it just requires more capital and stuff like that. I'm looking for someone that's well off. This is their vacation home. It's a beautiful home in a beautiful area, and they don't live in this state. The house is current, the taxes are current, everything's current besides their emotional, psychological aspect that, like they say, I need to get out of this because something is coming. I've already lost something, like my 401s. I've lost a lot. I took a big hit in it already. Okay, and they're now trying to lighten their load. They realize they have too much debt, and that's the type of sellers that I'm looking for. And when I don't have to come up money out of my pocket, then I don't really care. You really honestly what the interest rate is and how much the debt is. Now, of course, I want to buy the debt as low as possible. But again, if I don't have to come up any money out of pocket, all I have to make sure is an area that's appreciating for me. It's an area that I'm willing to live in. Okay, it's an area that's going to be growing. Okay, because in the next 5-7 years, what happened to the last crash? Well, you see the house market is higher than it was back in 2006, guys, 2007, 2008. So I believe the same thing's going to happen. All I got to do is just hold that baby, babysit it, wait for the time to exit it. But this cycle around, I'm not looking for the same type of motivated sellers that I was, in the last cycle, which were divorces, behind on their mortgages, things of that nature. This time, I'm only looking for vacation homes at nice spots that that I can enjoy myself, that I can Airbnb, and that are going to cash flow And with the interest rates what they have been for the past 4 or 5 years, there's going to be a lot of deals out there. Not everyone's going to be interested and motivated, and that's totally fine. But there are going to be motivated sellers out there, just like the bicycle flip. And this is why it's so important that if you haven't gotten into the new flip, the bicycle flip, that you do, because you learn what a motivated seller is. You get to see that there are people that are willing to sell $1,000 bike for just $100, $150, because they're motivated, because they're moving, or they've already moved, or they can't afford it, they got to pay their light bill, whatever the story is. And once you see that happen multiple times, then it builds your confidence to do the same thing with bigger things. Like in the last crash, I almost negotiated a Tesla from a military guy where he was letting me just subject to it, make over his monthly payments, or he told me, hey, if you want to pay cash for it, I'll pay $25,000 in my own pocket to make it current, because his car had negative equity. And at that time I was donating all my stuff, so I decided not to pull on the trigger to the homeless. So I didn't buy it. But there's all kinds of deals out there. If you're willing to, you have the ideas, you have the way to structure a deal, you know how to set it up, you're patient. And I think 2022, 2023, 2024 are going to be amazing, unless Big Brother doesn't kill us all, because the way things are going is a lot of countries around the world, Big Brother, they're all pushing for the next destruction of man. Apparently it looks like, ladies and gentlemen. If that doesn't happen, there's great opportunities, and I hope and pray that never happens to anyone, guys, because I'm for love and peace. Okay, you guys have any questions, let me know. I'll be happy to answer for you. Let's see. All right, what's it? How do you find pre-foreclosures? Okay, that's a very good question. One of the best ways to find pre-foreclosures is just go to your local county clerk's office. Okay, your local county clerk's office in every state, usually, that I've gone to, they have that data, and it's usually free. So there should be a link below, or if you go to my website at My Real Estate Dojo, there is something called the Subject to Launchpad. In that course, I have 24 courses. One of the courses shows you exactly, I do a video training, how to go to your county clerk's office and pull that data up totally for free. This is video course that I have that I give my VAs for them to go and get this data for me, so I don't have to do it. Okay, so this training is a step-by-step that shows you how to get the data in your local town, how to get it for free, or you can just go to your county clerks and do it. But if you want a step-by-step instruction, go to My Real Estate Dojo, download the Subject to Launchpad. There's basically 24 courses. It's worth over $9,000. I'm letting you guys just have it for $200. Okay, 24. And the reason I'm doing it is because I see what's coming in the real estate crash, my opinion, and I want to help you guys out. So in that 24 courses, one of the courses shows you exactly how to pull the foreclosures for free. So you don't have to pay for a subscription, you don't have to pay anyone. It shows you step by step how to do it in any state. On top of that, you have all my seller financing paperwork, like my contracts, like lead generation for free, lead generation for paid. I've given you postcards for all types of sellers, divorces, pre-foreclosures. So let's say you find a motivated seller, you go into my Subject to course. There's a postcard section, and it has all types of audience of motivated sellers, like divorces, like pre-foreclosures. So if you're dealing with pre-foreclosures, you go to the pre-foreclosure sections, and you have 10, 20 postcards that you can send them that just doesn't say we buy houses, actually educates this seller for you to build credibility for them to call you. So you just go in there and just shoot those out. We have flyers to generate leads. We have all kinds of stuff, like how to negotiate seller financing, subject to contracts, stuff that I personally use, postcards, letters, mobile marketing, SMS. I mean, there's 24 courses, tallies up to over $9,000. You can get it for $200, including how to find the subject to deals, guys. Okay. Anyways, guys, I'm at the park right now. I'm going to go have lunch with my kids. Just wanted to stop and let you guys know that I'm very, very excited for the upcoming crash of 2022. I predict by December, by winter, this winter is going to be 2006 fourth quarter. Okay, it's not the the last crash happened in 2006 fourth quarter. Everyone talked about it in 2008. Okay, this is the 2006 fourth quarter moment right now. Everyone's going to be talking about it in a year or two, that boom, the thing's popping. I'm letting you know right now, it's already starting. I'm driving around, riding my bicycle, and I'm seeing inventory show up. I'm seeing more and more people struggling. I'm seeing the stock market bleeding. I'm seeing what's going on globally, and I'm seeing the food shortages coming up. I'm seeing inflation, and all that means is, guess what? Major sells in many different things, not only in America, all over the world. It's going to be risky. If you're willing to take the risk, you can get the biscuit, or you can lose it all. I'm not telling you what you should do. I'm just telling you what I'm doing, and it's a great day to be alive. And let me leave you with this. Always remember, you're braver than you believe, stronger than you seem, smarter than you think, and twice as beautiful as you ever imagined. And last but not least, if you haven't got my free book for seller financing, get it now, guys. I'll show you exactly how to generate leads, where to find these leads, how to talk to them. Everything you need is totally free at myrealestatedojo.com. Get it before I change my mind. Peace.